IPOs in general are a fascinating beast. So people get so excited about a company because it isn't listed and it will be listed, and they flock to try and get these shares. Essentially, they're buying a business, and one must do the same analysis whether you're buying a business off the primary market, i.e. the IPO market, or the secondary market. It's not like when a share's in the secondary market, it's not like you're buying a second-hand car. You're buying the same business. So what flummoxes me is why, number one, people get so excited about floats in general, when 99% of the time, at some stage, you can buy the same business cheaper on the market. But also you see these floats that are 2, 3, 4 times oversubscribed at a price, let's say company XYZ at $2. They then, when the company lists, the same business might list at $1.80, yet the buyers are scarce. So they're obviously, a lot of people buying into floats aren't necessarily looking at buying from a value investment perspective. They're actually hoping they can get a stag profit. So they're buying for the complete wrong reasons to start with. And I know that didn't answer your question. So I tend not to participate in floats generally. But one that we really liked was basically on a value play. We liked it in the float, and we also liked it after the float. We bought shares after was IVE Group. So IVE Group, basically they're a marketing business, but they're the guy running it's third generation. The company's gone out of his family, into his family, out of his family, into his family. It's third generation running this business. And essentially the key thing is they do banners, they do point of sale stuff, but the key thing they do is letterbox production of personalised and generalised mail drop letters and brochures and all that sort of stuff. And given the demise of newspapers, advertisers are saying, well, where can we get exposure? We can't, not getting exposure through newspaper. Free-to-air television, it's still got legs, but it's not as many people watching because of obvious reasons, because of the internet. Going and buying Google ads is an obvious thing, but that's not for everyone. So, if you actually want to get a piece of paper in front of someone's eyes, in the old days you would just put an insert into a newspaper. So what's actually happening? The only way now to get a piece of paper in front of someone's eye unless you're handing it out at the train station or putting it in a newspaper, is letterbox delivery. So we see this as a way that businesses will actually perhaps move to look for something different in marketing. So notwithstanding that potential upside on their current earnings, they're very good value, they've got great managers, they've got as I say, very sustainable, good business model. And it's just everything we look for, very low debt, all the rest, with that potential upside. So the margin of safety is in our favour, and we like the thematic. So that's one recently that I think is worth looking at.